Good morning, everybody. Welcome to the Flow Show, Monday, the 2nd of February. Hope you all had a good weekend. We've got a bit of a week this week, a few central banks popping up and plenty to talk about, no doubt, and a few moves in them old metals going on. Again, wild moves once again. We'll look at those as well. Morning, K-Man. How's your weekend?
Morning, Ryan. Morning, everybody. Yeah, the weekend was all right, mate. Quiet when markets are closed, huh?
Yeah, exactly. Nice to have a bit of a break, but didn't last long. Sunday was a bit wonky as well, so
Yeah.
we'll get into all that. Right, going to start off with a bit of data out of China. We had the Chinese manufacturing PMIs from the old rating dogs, is the private survey. That came in at, actually, we've had two in, sorry. We've had the rating dogs one and this one in. This one is the National Stats Bureau one, whatever you want to call it, 49.3 versus expected 50.1. We did get the ratings dog number in. That came in at 50.3, was expected to come in at 50. Over in the Bank of Japan, we've had the summary opinions from their last meeting. It's a January meeting where members have urged timely rate hikes to address the yen and the real rate gap. They said they need to adjust significantly negatively real policy rate as FX markets focus on the real rate differentials. They say yen weakness and higher long-term yields largely reflect fundamentals. They say the monetary policy prescription is seen as timely and appropriate policy rate increases. They warned against delaying the next hike because there's a risk of missing appropriate timing. However, the preference was for raising the policy rate at intervals of a few months. So a couple of comments to say they might want to hike faster, but then another one saying that they're going to look at raising rates at intervals of a few months. Overall, nothing really of note out of that. They're still not going to do anything until everything lines up appropriately and their outlook and whatnot. But the next big feature is going to be these wage talks coming up and how they're going to turn out. We've had, I don't know what you want to describe this one. So Takaichi had she had a speech over the weekend, and the press decided they were going to highlight on one aspect of her comments where she was talking about the weak yen and how it impacts exporters, i.e. a weak yen is good for exporters. This all got a bit blown out of proportion because what she was talking about was the merits of a weak and strong yen. There's always two sides to the coin regarding strength and weakness in a currency. While a weakness makes your imports more expensive, putting pressure on prices, higher prices, it does have a positive in that it's better for exporters. So anyway, the press jumped all over that. The weakness aspect, bit of a storm in a teacup, and all calmed down a bit now afterwards. But she is not advocating for a weak yen policy, as the wires made out. Kay, not much of a move, fortunately for her, in the yen on those comments, but usual press shenanigans.
Yeah. Oh, what is my squawk doing here? Yeah, what's a nice squawk doing? Yeah, I think the comment especially was taken also as for a weak yen, that she was supporting it. That she said that the weak yen makes the FX special account happy. Of course, I mean if you look at the reserves, which are expressed in foreign currencies, if the foreign currencies rise, your account is looking better translated to yen. But yeah, somewhere I don't think she was really advocating for a weaker yen. Because she then clarified her statements. It is perhaps more to be interpreted as she doesn't really, not that she doesn't care about the end levels, because we also remember from a week or so, or a week and a half ago, that she herself was commenting on 2 weaker yen or so. But I don't think it's on the top of her personal agenda. Her personal agenda is to get that Japanese economy on the rails and to help to achieve it, spend a lot of money, and the rest will probably be the yen will be Katayama's problem, and I think it's more to be interpreted that way. But as you say, I mean, the press always a bit lost in translation, especially the foreign press. If you translate Japanese, not always obvious to understand exactly what they what they mean. But yeah, I think yeah, it's more like it's not on top of her agenda, but it's not a clear advocating for a weak yen. Otherwise, it would really put a lot of pressure on the yen. I think if she will get elected at the end of this week, at the end of this week, actually, yeah,
Yeah,
we're a week away.
yeah. It's on the weekend. It's going to be, isn't it? So it's
Yeah,
going to be sort of Sunday. Well, we should get the results Sunday. I think Sunday,
yeah,
Monday,
yeah.
early part of.
Yeah,
So
as we open in on really as Europe would open on Monday morning, we probably will know whether she really gets it or there will need to be some negotiations or whatever going on. Um, but yeah, I'm still of the opinion that she gets it. So yeah, we'll see.
yeah, it's all going to be about how strongly she wins that,
Mm,
and I think it's going to be more positive. She gets a majority on her own without the need of
yeah,
any sort of coalition party. But
yeah,
yeah, we shall see. We'll crunch all the numbers later in the week. Right, over to while we're in Japan, they had their PMI out as well, manufacturing PMI that came in at 51.5 as expected, so an improvement there on the month. We had some retail sales out of Germany, which came in at a whopping 0.1% gain year on year, came in up 3.2% from a prior minus 1.6%. These are December numbers, so not exactly going gangbusters in that holiday period for Germany. We had some of the other final numbers, or firsts and finals, starting with Spain. That was a first, 49.2 for manufacturing. So going backwards a bit there. Italy as well. They went backwards. They went up 2 pips, but not as much as expected. 48.1. France, they improved to 51.2. Germany also improved, 49.1. All that kicked up the Eurozone measure up a pip over the flash number, 49.4. Excuse me. The standout from all those PMIs was that there are hotter price pressures coming in, higher input prices coming in. A lot of that down to metals, commodities, and whatnot. Firms are not looking like they're able to pass those costs on, or trying not to pass those costs on. France actually still discounting prices. Germany struggling themselves to pass on those price increases. So a bit of a margin squeeze faced there. We've got the final UK manufacturing PMI, 51.8, so up 2 pips over the flash number. Again, price pressures there, and some less crap news is that job losses were still evident, but not running as fast as they were previously, so they could be slowing up somewhat. The ECB had one of their surveys out, which showed that firms are reporting a rising turnover over the last 3 months. There's a net 18% optimistic about developments in the next quarter. Firms continue to see, though, a deterioration in their profits, with a net 10% of firms reporting lower profits. Inflation expectations were largely unchanged across all the horizons surveyed. Going back to a bit of data that we had at the US, PPI data, planned a bit of catch up with the CPI data, so now we're all in line with that. That PPI showed that things were a little bit warmer. Month on month was higher. Year on year PPI came in unchanged at 3%, was expected to drop to 2.7. The core number also a bit of a jump up 3.3% versus 3.1% previously. That's going to raise those expectations for the PCE data, which had been expected to come in around 3%, which will be another rise when we get that data through. So still sticky inflation for the US. We got a bit of GDP data out of Canada. This was for November, came in flat on the month of November and was up 0.6% year on year. So again, a bit of a weak month into the year in Canada. Fed's Bostic says 2 cuts is not his baseline case, and expects inflation to be stubborn. Fed's Waller said he dissented in favour of a 25 basis point cut at the last meeting because policy is still restricting activity too much. He said the labour market does not look remotely healthy. Fed's Mirren says he assumes Walsh will take over the governor slot he currently holds, and says Waller is more concerned about the labour market than he is. Fed's Muslim says further cuts are not advisable. Current policy is neutral, and US economy does not need stimulus. So, as we all know now, Trump has picked Kevin Walsh for the Fed chair. He said he will probably talk about cutting rates with Walsh, but it's inappropriate to ask about rate cuts. I don't know how you talk about rate cuts without asking about rate cuts. Anyway, he says Walsh wants to cut rates, which he wouldn't know unless you'd asked him. Says we'll cut rates without pressure from the White House, even though he's putting pressure on Walsh already. So we've got the process now. The market's pretty much got over that hump over who it's going to be. We've got to go through the cogs and processes to get him through and in the hot seat. GOP Senator Tillis said he will oppose confirmation of any Fed pick, to which Trump responded later on that if Tillis doesn't approve of Walsh, we'll wait until someone does. The US Senate banking chair head thing, Scott, said he will lead a timely Walsh confirmation process. So we're just waiting to find out how long all that is going to take and what barriers are going to get thrown in the way of that confirmation. Okay, the market's a bit settled now on the old Walsh situation. As I mentioned in the chat room, I think what the market's going to be looking for whenever he speaks next is he going to be over dovish or not? And that's going to be our first indication of what we're going to get.
Yeah, so far the market has taken it as still recalling how hawkish he was in a way. Not having forgotten that he said lately that he would be supporting cutting rates somewhat, but I think where we saw the biggest impact is well the biggest impact recalling what he said before that it was a very much against QE, and now he wants to reduce the balance sheet. That's going to tighten the conditions. But again, it depends on what market we look at, right? Yeah, FX, but FX probably also got helped by the complete washout of the January rise in metals. But still, yeah, we don't really know exactly where he stands. So I guess we shouldn't be waiting for too long, I trust. As people said in the room, can be sure that some news outlet will want to be very eager, all of them actually, to stick a mic under his phone nose and get some comments. I think we are not going to have to wait for too long. But yeah, we had this reaction when he took over in the polls versus Hassett, already a bit of a stronger dollar reaction based on what he was saying in his former life. So yeah, that's the reaction that we got in FX for now. Now, interesting though is even though the tens are still above. Are still above 420. The twos have come down a little bit, but still above 350. The two tens haven't really widened too much on the back of his nomination, which is where the market is probably going to expect that we should see a bit of steepening in the curve, but that hasn't really materialized. So that's where I'm saying that not all markets have reacted in the same way, although we know that the bond market has already widened, steepened a little bit in the past months. But yeah, on Friday it was more a reaction of, all right, I mean, is he going to be hawkish or what's he going to say, right?
Yeah, absolutely. So we'll have to wait and see when he decides to pop in front of a microphone somewhere. We don't know when that will be, but the market's going to have its beady eyes on that. And after he's spoken for the third, fourth, fifth time, the market will settle down a bit into that anyway. Right, last bit of news. Ukraine stuff said that the talks that were planned for this Sunday, gone in Abu Dhabi, did not take place due to scheduling reasons. This is coming from the Kremlin. The next round of security talks will take place, same place, Wednesday and Thursday this week. The Kremlin has admitted that Russia and Ukraine have narrowed their differences on some issues, but not on other more complex issues. So slowly they might be getting there. Obviously, the territorial stuff is the big sticking point at the moment. Right, you got anything else, Kate?
Just a couple of things maybe over the weekend. G calling for renminbi, not the first time, to become a reserve currency. It does look that the market, where it was like completely ignoring those kind of comments a few months ago, is actually listening to it right now, because we saw the yuan strengthen a bit again to start the week. We've also seen a bit of better activity, as you already said. In China's manufacturing, it does look like the market is still looking at the yuan through pretty positive lens. And then yeah, we had the OPEC keeping the output stable, if I read that correctly. Not that there was much expected, but still some discussions, negotiations, etc., going on the sides of it. Seen some pretty decent moves as well on in the oil market after a weekend going by without an attack. So on our end. So yeah, still stuff that will move, but the weekend risk mostly out of the way right now.
Yeah, absolutely. And that's that situation over there in Iran still ticking over a bit. So we're not exactly out the woods with it yet. But yeah, not anything coming from that right this weekend. Anyway, right, let's have a butcher's what's coming up this week on the data front. Obviously, it's a heavy central bank week. Got jobs as well, NFP, got the ISMs coming in, so quite a busy week. Got the RBA as well tomorrow, where they're largely expected to hike. And we get to see if they do, and if that's going to be the start of something, or whether it's just a little one to calm things down a bit. So the rest of the day, so Monday today, we've got the ISM manufacturing. That's later on. We've also got tomorrow Kiwi jobs to keep an eye on, as well as US jolts. On Wednesday, we get the rest of the services PMIs dropping in as well, and we get the flash number for Eurozone inflation, so keep an eye on that as well. ADP will be dropping as well, and then ISM 2 on Wednesday. On Thursday, we got double banks. It's both the ECB and the Bank of England. Little expected from either of those. Probably the greater focus will be on the Bank of England, just to see if there's something in the mix for them to worry about. It's February, so I think this is a monetary policy report meeting. So that means we'll be getting a presser. I think it's this one, February, but I'll double check anyway. Also get Challenger layoffs. Then we get the ECB as well. And then it's a bit quiet going into the rest of the day. On Friday, yeah, go on, mate.
Yes, on the Bank of England.
Yeah, I thought so. February. It's usually February, May, August, and whenever it is, December, something like that. So yeah, thanks, mate. Friday, double bubble. We got Canadian jobs and US NFP. So that will keep us busy, keep the Fed busy. Well, till their next meeting anyway, and we'll get to see what's happening with that good old jobs market. Anything really there that tickles your fancy, Kate?
Oh, phew. Sport for choice, because as I said earlier, we could hear from Wash as well if he gets a microphone stuck under his nose. So I think we're going to be really spoiled for choice. The jobs, obviously, because the market is still looking at whether the job market has stabilized, as Powell was hinting at, sort of stabilized. So that is likely going to be an important one. Yeah, I think ECB should be autopilot. Bank of England, yeah, could be quite interesting. And then just the global state of the US economy, because we do have the ISMs coming out. We do have those job reports coming out. So it's going to be an interesting week, especially after what we have seen at the end of January, right? That spike in the euro dollar now coming back. Well, the spike lower in the dollar in general after Trump comments, and then making a comeback. Sorry, we have seen over time those numbers in the States still outperforming whatever happens in the eurozone or in England. Um, yeah, I think it's going to be a very interesting watch just globally this whole week, mate.
Yeah, yeah, exactly, mate. One thing just to keep an eye on here will be the jobless claims number this week, because if there's any skews to be had regarding the weather last week, all the snowstorms, whatever, it's going to show up in these numbers. So just in case you're watching it and you see a funny one, it's likely to be weather related. Offices shut and people can't get in to register claims and whatever. So that can skew that number. It won't have any effect on the NFP because the survey times dates for that were outside of that period as well. Right, so that's that on the data front. Right, I suppose we better start with the metals, K, because fun and games on Friday. I mean, we've only done what $1,200 in a day and a bit. Just par for the course for metals at the moment.
Business as usual. It's been quite crazy, right? Yeah, we said it last week as well. I mean, be careful because if the gamma negatives are really getting squeezed one or the other side, it's gonna go hard both sides, and that's what we got. And then we had a little bit of an additional one there after the Wash nomination, which was probably not going to say the driver, but just acted as the trigger, right, for the next move. And yeah, it's been extremely wild. I can look at him. I've got some lines on there, some boxes on there, whether it's gold or silver. We're stopping on interesting levels, but it's dangerous to trade if you don't go. Um, let's say like the real short-term positioning. You're in for 5 minutes following the move that's going on. Fine. Or you go in for the really longer term and with your preferences, your bias that you're trading based on the fundamentals. Then and you go in really small increments to probably build a position again if the bias is strong enough. But I guess it's going to be I, I'm not saying that we are going to have these kind of ranges anymore because I personally think that after such a big washout and whether it be upside downside, it's likely going to stabilize relatively speaking, but we could still have some nasty moves in there. If you look at gold, I'm like looking at that 4,400, which is a pretty decent level there. I'm also looking at the 49.40 on the other side, because if you go back above there, if the people are still gamma negative, they're going to have to run for the hills again. So no, but I would say it's going to be very volatile because we saw it. We also saw that Asia did not stabilize because and they for sure did not come in and buy the crap out of it. So that gives us a hint that the shall I say those who were building reserves to sell how shall I say allez, to the retails, they probably have what they need right now for jewelry, etc. Um, so I guess we are going to range trade a bit more, but albeit within a wider range than what we were used to months ago.
Yeah, we've got Chinese New Year coming up February the 12th, I believe.
Yeah, yeah,
So we could see a bit of buying, last minute buying
yeah.
into that, but you're not going to be able to tell in amongst all these sort of moves. A brand, yeah, it went down to a level that I highlighted ages ago, but it's carved through 300 levels on the way down to that one.
Mm.
It's had to stop somewhere,
Mm.
and it's
It-
probably more the fact that it was a big figure than my coloured line on the chart. But
mm.
it's, I mean, this is bonkers. It's just bonkers. I mean, I shorted some around 51 and I thought I'd done well getting $80 out of it, and then it just carried on going for another
Mm.
700. So
Yeah.
you gotta, that's the thing. It's all right looking at charts now and thinking, oh, I wish I'd caught that. But even if you get in a position, you see money on the table, you have to take it because it can, reverse $200 in
As,
against you, and you
as a
lose
re
quickly.
yeah, as a retail day trader, you have to. You
Yeah,
have to because it's unreasonable. Because imagine that you take a low there 50 and a half or something, and then you find yourself like they did overnight, tapping the 51, and then you find it back at 54 and a half. I mean, what's the use of trying to be a hero in those markets? I mean, I too I say okay, maybe I missed something because at 5300 I was saying like okay, this is starting to look overdone to me, but it still added $300 to it before reversing, right?
yeah,
So I mean, those for us, those are markets to be very cautious about. I know some people in our room, they have taken this move down, which is perfect. But before getting there, they had to go through quite a bit of risk taking, right? Because if you're short sub 100 in gold, in silver, you add up to 110, but you did print 120. So, I mean that. Yeah, I mean, it's been good in the end, but you're still looking at 15-20% against yourself. So before the thing starts reversing, which is for most of the day traders a bit of a too high risk.
yeah. But I agree with you. This sort of thing, it can now settle the market down a bit, okay? Because you've had
I
this
think so.
slow,
Mm,
well, we called it slow, but compared to the way it came down,
mm.
it's a slower move up. You've got a chance. It builds momentum. It builds momentum, and then when it does this parabolic thing, like we were saying, it looks extreme, and then you're going to get this sort of reaction. So, yeah, we've probably got to wait and see where the levels define themselves. Definitely up to probably 5K is something you need to watch. If we start banging our head around that sort of level, then maybe we're setting up a bit of a range. And if it just goes through that and just keeps climbing, then maybe we are going back. Do you think that the reasons why we saw this buying is now done, Kay, and we're just going back to normal, or is this going to be a dip buyer's dream the way they've pushed it up for the last 6 months?
Um, that's what the fundamentals are going to tell us. But I mean, for me, the fundamentals are still there for it to find support at certain levels. Um, but as what I said as well, and then on Friday we also had like, and I think a lot of people actually missed that, but I think it was part of the game, or part of the retracement or corrections. Is that there was like this kind of whiff of about maybe a bit of a short-term ceasefire, Ukraine, Russia, and then but to meet in the Middle East. I think it all contributed, but all of those factors are still there. I mean, if we find a solution in Russia, Ukraine, to a lesser extent, maybe Iran not getting bombarded, because that's going to have, of course, a bigger effect on the oils, Brent, etc. But it also going to have an effect on dampening effect, maybe on gold, because you don't need as much hedging. Um, and but then we will have to. It's there's so many factors, because even if you look at it, wash could have an impact, because if you say like um, reducing the balance sheet further in the US, which is going to tighten financial conditions, is something that metals may not like too much. So that could pressurize them a little bit more. But then, for as long as wars are still ongoing and there's a lot of tension on the geopolitics, the fundamental reasons, the base reasons, are still there. Now, get a solution in Russia, Ukraine, and the drones stop flying, then I think we're in for deeper corrections, much deeper corrections.
Yeah, yeah, I agree with that. Right, so what about the dollar then? The last couple of weeks it's been a sell US trade, which didn't compute on so many different fronts, bonds and stocks. And we were saying last week it's smelling, all this dollar move is smelling like commodity move. So no surprise really then that commodities, precious metal crap out, and so does the euro.
Hmm.
Obviously not with the magnitude that the metals have done, but all of a sudden the dollar's back in favour again.
Um, well, we let's say that we are correcting the what happened towards like the start of last week, right? And Trump didn't help either. We were all a bit scratching our head, like, hang on, I mean, this move up to 120.80, just on that word dump by Trump, is it really justified? And then yeah, Wash I think sparked a few of the dollar shorts to run for the exit. Whether the dollar is still in favor or is in favor again, sorry. I think that's what we are going to find out this week, Ryan. There's enough data out this week, let alone even imagine even that we don't hear from Wash. There's enough data out this week to to give us a hint whether the dollar will be back in favor or not. Because if ever we do find a weaker job report, the market will be looking at it. I think the market will not overlook that, and then the dollar could get the next slap again. But if we continue, as you say, to print, and you've been saying that for quite a while, to print those better numbers, especially compared to its closest, let's say, allies and trading partners, Europe, UK, maybe even Japan. Yeah, the dollar could actually get back a bit more, and that's why I'm getting into February with a clean slate, mate. And I am overall maybe still looking at a little bit the dollar on the defensive, but I'm not going to hold back of buying it if the data tell me to.
Yeah, no, I agree with that as well. You just got to look at the price action as well. It does. The euro has been pretty strong. It's been pretty strong. It was weaker going into this year. Coming into this year, it's turned around. So I can't say we're done with the upside. 19s, 20s, 119s, 120s. Finding funny that we're finding a bit of support down here against this gap that gappers will be looking at. Can't quite hit it. That's looking like maybe a sort of a double bottom, if you can call it that, coming into the different weeks. So it's not. I don't think we're done yet, but I think rallies particularly to 119 are going to be interesting if we hit ahead there and fail to get back up through that. Then we could be seeing a bit more downside coming into that. Right, Kay, I'm going to pass it over to you. I'm sure you're going to have a look at the old Aussie dollar as well, as we've got the RBA coming up.
Sorry, I was muted. Yes, I will have a look at the Aussie because we are going into that RBA next night. I think Ryan on the euro, you were talking about the euro. We've got an interesting zone here. You were talking about that little gap open on last Monday, but then also on its own, it's a pretty interesting level there, and I would stretch it down maybe to 118.0510 from 30 down to 10. I think it's going to be an interesting watch on the euro. Also, if you look at this one here, that was from even from June, that already that 118 2030 has been showing up a number of times, and I think it's going to be an interesting watch going through the week, whether we have a test, hold it, or go for a little lower, which could then bring us somewhere ultimately into the mid 117s. But I think we yeah, it's going to be an interesting watch on the euro dollar. Similarly on the cable, and I am on a little wider one here because we held on the first retracement here from the whole November move higher in the cable, 136.65, 65.70, and it is a level on the shorter term as well. If you look at this here, it has already shown up here as well, 136.65.75, and it just held on there. Yeah, okay, 60. But we held this level, so I think this is already interesting enough to watch for the start of the week. We will have UK, of course, the Bank of England. We will have but that's another 3 days in between. We can do bigger moves. But I would say to start the week, watch what's happening around that 136.65 zone. I have more levels below, down to 136.20, 135.90. I think over there we should also pay attention because if it goes through there, we may need to make, or people in the market that may need to make a decision on the cable. But for as long as it holds, it's looking still okay for the cable if you look at that move, right? Um, Moving over to the Aussie then, because this is what it's about now, because the whole market is looking at this RBA meeting because it could be one that is barring the Bank of Japan, but that yen is also in Japan is a completely different story compared to all the rest. But it could be the first central bank that is looking at hiking rates again, where most of them are now on hold, and potentially the next move still be a move to the downside. Australia may have to hike rates. Seen what Bullock has come up with over the last meetings. She's disappointed that the inflation is higher. She also got a better than expected jobs report, which could be supportive for a rate hike. So on the Aussie dollar here, yeah, we went below there on Friday, and I think a few and earlier in Asia as well. I think a few people got like a bit rinsed on long positions or not wanting to be short dollars anymore. So we went below this, but we are turning around. We are turning around the 69, 60, 65. 70 is a bit of a psychological level, but I really think it is this level that is going to be deciding on where the next move is going to be. So what are we going to get from the RBA? So the majority are expecting a rate hike. I kind of tend to lean that way as well, which should be making the Aussie, which is already at 3.6%, a relative high yielder in the G11 space, let's say, and perhaps put a little bit upward pressure again on the Aussie. But we could also end up having like a pretty dovish, maybe not, but warning hike, saying that yeah, we are hiking, but it's only because of inflation, because the rest we are not overly impressed, whatever. In which case, we could indeed end up, as Ali says, with a bit of a disappointment sale, and we can also, because the majority expects a hike, but it's not therefore that the central bank will de facto go. End up with a very hawkish, but still a hold. In which case, the market is probably going to sell a few Aussies because the market did not get the hike. So and then we will have to look at what the next zone is here, which is around where we stopped in Asia, just below there. And I would say this red line here that when the little parabolic when we broken it and which comes in at around 69 the figure, and 69 the figure stretch it to 68.80 is going to be the next support zone, and we find it back around here as well, which is also just below the 69 line. So this is the level that I'm going to watch if ever we get disappointment sales on the Aussie overnight. Does it stop in this zone and then start to stabilize or tick up again? Does it continue to weaken? But again, as I was saying earlier, the dollar is not really. I've got a little bit of trouble to go bonkers long Aussie also because my bias on the dollar is perhaps not strong enough to start this week, and I would rather express it in Aussie Kiwi. I know that the RBNZ, that there's also talks that the next move could be a rate hike, but they are at 2%, where the Aussie is at 3.6, potentially going to 3.85. There is a real interest rate differential for me at least. We have seen this sharp move back down because Aussie is also um, obviously has had a bit of support because of the higher gold, the higher commodities. Okay, those commodities coming down, Aussie has come under pressure, but if we would assume that those metals are going to stabilize, I think Aussie could perhaps gather a bit of strength again. Obviously, if there is disappointment, this 115 and a quarter is probably going to give way. Then we need to look at what's going to happen in the low 115s here on the Aussie Kiwi. But if we get a rate hike and Bullock is not too dovish, I am leaning towards the side that we have found a bit of a bottom around here and that Aussie Kiwi could start to grind higher again. That is how I look at it. Obviously, price action will tell us what exactly we need to do with the Aussie overnight. But there's the Aussie dollar on the one side, but I would also not forget to have a look at the Aussie Kiwi because the as I said, the differentials between the two cousins could give it a trading opportunity. Um, uh, expand on the Aussie Kiwi. No, well, yeah, but I don't always have to divulge all my positions on a thread on a free seminar, on a free webinar or free show. I've said what I'm leaning towards. So that will have to do for today. To see my positions, you can look at them in the trades room. And I do have a small position, but here we go. What else, guys? Quick look at this. This is the line that I'm looking at, Ryan. We had this like October bit of a setback, and then we started to rally, yeah, pretty sharply. And if
Yeah.
you look at the lows, the lows, the lows, the lows, we have actually 4 touches, which is pretty cool for a trend line, and we stopped right on there around the low 44s, which is right above also 43.80, 43, yeah, 80. I think this zone is relatively interesting, 43.80, 4400. That's why I highlighted it also on my updates this morning. This little support area. The bigger one is coming in lower. That I've got that's closer to 4K, but I think to start the week, it's already good enough that 43.80, 4400.
Yep. Thanks, mate. Thanks
Yeah.
very much.
And then here, the last one, silver, and that's about the same time. We've had this bit of a up and down, a little bit of a low here, a little bit of a low here. This 69.71, you can hardly put it tighter. But this is also where this is actually only the December move. The October move would be further, but only the December move where we started January from. We nearly tagged it again from where we started. So I think this 69.71, well above this 45.55 zone, is already going to be a zone that is worth closely monitoring for silver on the downside. Top side, I think where we slowly are heading towards to again, I would say somewhere 83.5, 84 is where we start to monitor topside moves on silver. If we get it back above there, we could do another bit of a rally, maybe perhaps back up to 90. And with that, back over to you, mate.
Thanks a lot, mate. And we'll call that a day for today. Thank you, everyone, for coming to the Flow Show. Don't get to stick with us for the rest of the week. We'll catch you all later. Catch you tomorrow. Have a great day. Have a great week.